Hello everybody, it's Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at using multi-time frame analysis, or how our setups fit in with the higher time frame large degree trend on MTPredictor. And I'll be looking at a Forex example. But first we have to look at our risk disclaimer and remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken. They're just shown for illustration and trading purposes only. Remind you there's a risk of loss in trading and investing. We'll be looking at a losing trade in the video, but no matter what trading approach you use, there always will be losing trades, and it's important to understand and accept that. Right, the example I want to look at is the Australian dollar US dollar on a 4-hourly chart, and in particular this VS sell setup here. For you guys who've been following MTPredictor for a while will know that we don't use MTPredictor as a black box system where we blindly follow all the trade setups, perhaps in the direction of our MTP trend. We don't do that because markets are basically random about half the time. So 50% of the time you shouldn't be doing any kind of analysis because they're basically random. So of course the question then arises, well, how do we decide when the market is not random? In other words, when it's coming into a clearer picture. For this we go to our higher time frame chart. If you're using a 4-hourly chart, you'd go out to say the 8-hour or perhaps the daily. In other words, the next logical time frame between 3 and 5 time frames higher. If you're using say a 3-minute chart, you go out to the 15. If you're looking at daily charts, you go out to the weekly. Now here I'm going to use our training mode. And I'm going to jump back to a couple of weeks ago on the Australian dollar US dollar. So here we are here. So what we do is place our DPs on the chart. For this we go back to the previous pivot high, we right mouse click there, place DP on. Can you see how it's on the chart in advance? So it's there preparing you in advance. In other words, it gets there on the chart before the market even gets there. So then you can start to go to your scanner, and then you can watch your scanner for the trade setup on the time frame you're actually looking at. Right, let's turn training mode off, and you can see what it did. It actually went up to that level and then backed off. So now if we go to our time frame we're actually trading, which is the 4-hourly chart, can you see how there's your higher time frame resistance area? In other words, it's on the chart in advance. So it's there before the market even gets there. So you're prepared even before the market gets up to this level here. So I say again, if I jump back to here, there you are, there's your higher time frame level. You're prepared if the market gets there. So when it goes up to that level, you're then prepared to watch out for potential sell setups. Now here we have a VS or a volume spike sell. So now I'll place the analysis on, and this gives you the position sizing, which allows you to vary the number of lots, contracts or shares depending on your account and risk size. This is using 2% on a sample $20,000 account. If you had a slightly smaller account, say $10,000, it would adjust the number of lots accordingly to keep that risk small and under control. And I'll show you why in a minute, because we'll come back and have a look at these losing trades here in a minute. So you then go forward, you're now taken into a trade, and if I turn trading mode off, you can see how now the Australian dollar US dollar has been declining nicely. It hasn't quite reached this first target here, but if it does reach this target, then the profit will be approximately 7.5 times the initial risk. And that's what we're looking to do. We're not looking to avoid losing trades. We're looking to keep the losses small, and when the profits come through, have the profits large. But can you see how we're using our multi-time frame? In other words, we're going to the higher time frame chart to project our higher time frame support and resistance zones on, to then give us a larger degree area where we can anticipate the market's going to make reversals. If the market does, in other words, the market behaves as you anticipate, or is basically doing what we expect, then we deem the market pattern is predictable and in the clear 50% of the time, and then we can look for trade setups on the shorter time frame. I just want to go back and have a look at these ones here. So if I go out to the daily time frame again, so I'll just want to take that DP off. The previous DP would have come off the previous pivot low or high there. If I right mouse click, there it is. You can see how that caught that high. By the way, if I go back to here, you can see how it nailed the low there really nicely as well. But I want to look at this particular level here, because when I come in on the 4-hourly chart, if I go back, Can you see how there was a lovely DP sell here on a black MTP trend that made a nice 3.7R? So that was a good trade as well. But the ones I want to look at are the ones here. Now you can see we have history triangles here. We have these that allow you to then right mouse click over them to then place the analysis on to see what would have happened at the time. It's the same as the using training mode and going back to doing it. So you can see here it looked like it was a good trade because there was your higher time frame resistance. The market may move down, made a corrective ABC. Our MTP trend was red. It looked like the picture was clear, but in this case you would have been taken in for a short trade and stopped out. So this would have been a losing trade. But the loss would have only been 1R or 1 risk unit. That's why we use position sizing. But it's important to understand that losses can and will and do unfold no matter what approach you use. So that would have been a 1R loss. If I look at this next one here and you zoom in a bit, can you see how this wouldn't have actually gone to your your entry trigger before hitting your stop order? In other words, this, even though there's a history triangle here, it wouldn't have been an executable trade. In other words, you weren't in on your entry stop order. So that's why it's important when you see these history triangles not just to assume they're losing trades, but be able to place the analysis on so then you can see what the market actually did. So even though there were 2 history triangles there were actually in fact only 1 losing trade. So this is what MTPredictor is all about, is when the losses come through, the losses are kept small at 1R or 1 risk unit, but over time hopefully you're looking to have profits that when they come through they're large, but not just large in dollars but large in risk units. In other words, much larger than the losing trades. As you can see, we haven't quite reached this level yet, so we'll see what the market does over the next few days to see whether it does indeed carry on down to reach this first target level. But that's what I wanted to show you today, is how to use MTPredictor on multiple time frames using a Forex example. Here we're looking for our trade setups on our 4-hourly chart. We're using our daily chart for our higher time frame resistance. I'll just go back out and place that daily resistance on there again so we can make sure we can see that. There's the daily resistance, catching the high there perfectly with our VS sell on our 4-hourly chart. And that's the best way to use MTPredictor on Forex.